Most traders come to the market looking for the perfect strategy, the perfect indicator, the perfect entry, and they never find it. You know why? Because strategies don't make you profitable, rules do. A strategy tells you when to enter, rules tell you how to behave when everything goes wrong. Today I'm giving you the 5 rules that sit at the core of my 1000 USD to 1 million trading journey. These aren't tips, these aren't hacks, these are non negotiable rules I follow every single day, and breaking even one of them has cost me money in the past. Let's get into it. Rule number 1: no trade without a written reason. Before I enter any trade, I physically write down exactly why I am entering. Note in my head, not a feeling written before I click buy or sell. The format I use, I am entering long on this instrument because price has respected this structure, is bullish on this time frame, and my entry is aligned with the higher time frame trend. My risk is this percent and my target is this percent. That's it, simple but incredibly powerful. Here is what it does. It forces you to slow down. FOMO trades don't survive this process. Revenge trades don't survive this process. If you can't write a clear reason in 30 seconds, you have no business entering that trade. Most traders enter first and justify it later. That's gambling. We flip this. Justify first, enter second. This is the rule number 1. No reason written is equal to no trade taken. Full stop. Rule number 2. Risk per trade is fixed always. I risk exactly X percentage of my account per trade, every single trade. Doesn't matter if I'm on 10 winning streak or a losing streak. Doesn't matter if I'm sure about this setup. Doesn't matter if I want to recover last week loss faster. Here is why this rule exists. Your edge in trading is only proven over hundreds of trades, not 5 or 10. To survive long enough to let your eyes play out, you need to still be in the game. The trader who blow accounts don't lose because of bad strategies. They lose because they sized up when it felt right and they couldn't survive the inevitable losing streak. So this is the rule number 2. Calculate your position size before every trade so that a loss cost you exactly X percentage of your account. It can be from 1 to 5%, not more than 5% per trade. Rule number 3: journal every trade, no exception. I said it in my systematic trading video and I will say it again. Your journal is your data. Without data, you are guessing. Every trade I take get logged with the date and the instrument and my entry, stop loss, and target. The reason I entered, the outcome, and a screenshot of the chart. But here is what most people miss about journaling. It's not just about tracking wins and losses. It's about identifying patterns in your mistakes. Your journal tells you things about yourself that your emotion will never admit. Rule number 3: every trade gets logged. No trade is too small or too obvious to skip journaling. Rule number 4: after a loss, stop, review, then decide. This is the rule I wish I had learned on day 1. When you take a loss, your brain does something dangerous. It tells you that you need to get that money back right now, today. And so you enter the next trade too quickly with too much size, driven by emotion instead of logic. This is revenge trading, and it's the single fastest way to destroy your account. My rule is simple: after any loss, I step away from the screen for at least 30 minutes, then come back and ask 3 questions. Was the trade within my system or did I break my rules? Was the loss outcome bad luck or did I make a poor decision? Am I emotionally ready to take the next trade objectively? If the answer to the question 3 is anything other than a clear yes, I do not trade again that day. Protecting your capital on the bad day is just as important as making money on good days. So, rule number 4 is after a loss, walk away, review, only return when your decision making is emotion free. The point is, we need to stop emotional trading. Rule number 5: weekly review before the next week starts. Every Sunday, I sit down for 45 minutes, review my entire week of trading before I ever look at next week's chart. My weekly review checklist: how many trades I took, how many followed my rules versus broken my rules, what was my biggest mistake this week, what did I do well, what is my one improvement focus for next week. This isn't optional, this is where real improvement happens. Most traders just keep trading the same mistakes week after week because they never stop to analyze themselves. The weekly review forces you to be honest, it forces accountability. Think of it like a sports team watching game film. The game is over now, you learn from it so you play better next time. In my 1000 to 1 million journey, this single habit has been responsible for more improvement than any course book strategies change I ever made. So, rule number 5 is Sunday is for reviewing the past week before planning the next. No exceptions. So let's recap the 5 rules. The rule number 1 is no trade without any written reason. Rule number 2, risk is fixed at X percentage always. Rule number 3, journal every single trade. Rule number 4, after a loss, step away, review before re entering. Rule number 5, weekly review every Sunday before you touch next week's market. These rules don't sound exciting, they are not supposed to be. Boring is profitable. I made an entire video on that, go check it out. The market reward discipline, not excitement, not frequency, discipline. I am documenting every step of my 1000 to 1 million journey live on this channel. If you want to follow the real process, not the highlight reel, subscribe and hit the bell. I will see you in the next one. Thank you.